Good morning. Welcome to Focus on Finance. My name is Shirley Luu, and I will be your host for today. Now, as you remember last week, I was just talking about insurance, was telling you stories. So I wanted to continue part 2 on additional stories that I think you wanted to hear. Now, where I dropped off last week was a lot of time, looking at your finances, how can you cut bills, and how you can do all these wonderful things. Did you know that recently I was at a luncheon and this guy came to me. He goes, "Hey, do you pay for electricity?" And I'm like, "Well, yeah, everybody pays for electricity. What are you talking about?" He said, "There's a lot of unique program out there. It's like a co-op program where you continue to do what you do, but then you get credit back for electricity, as in money, revenue back, because you're already spending it. And so there's some unique program where you sign up and you can get these rebate back." And at first I'm like, oh gosh, another one of those things, right? Is it real? Does it work? Any of those kind of things. But you know what? To find out, it is. It does work. Because part of the things, what's amazing about it is that you just have to be open-minded to hear what the options are. That's some of the example. Another things that I talk about are happen to reduce your expense. And credit and all those kind of things. And a lot of times people said, "Oh my gosh, Shirley, you look at the credit card statement and it's kind of like outrageous." One of them was paying like 27% in interest. Think about it, guy, 27% in interest, and then another one, just really high. So I asked them, I said, "Well, how's your credit?" They said, "Well, my credit score." "You mean?" I said, "Yeah, how is it?" They said, "Well, I'm still pretty good." I said, "Well, why don't you do this? I know that you have this particular high interest credit card, but did you ever consider to maybe get a new credit card where they give you a new APR for the next 1 year at no interest?" Think about it, guy, from 27 to a no interest, zero interest. So those credit card incentive are designed for some of the people that credit's too good, that you could transfer, because the company knows, wow, I know you're spending the money and I would love to earn the money from the merchants while you're doing that. So perhaps out there, you guys maybe, look at, okay, temporarily you move that, $20,000 debt into an account that got zero interest APR for the next year or so. So that means you yourself have to take initiative in that year to pay, at least some of that bill, more than just the minimum, okay? Because you're saving so much in interest for that time, and make sure you can pay that off. See, that's just, because you already had that debt anyway. But with a debt like that, well, why can't you find ways to reduce that? And that's one thing that a lot of people don't look at and don't think about. Look, at the end of the day, every penny counts out there when it comes to your money, and you have to know, when to make adjustment to it, okay? Now, I had mentioned earlier, the last episode, we had a situation, five real cases that happened. Would you believe? So a client comes in and said, "Hey, you know what? I bought this other policy and I think I paid pretty good pricing on it." And I said, "Really?" I said, "Well, what kind of pricing are you paying?" And in the case in that was term insurance. Now, ladies and gentlemen, you have to understand, just because you hear the word term insurance, you think it's cheap. Not always true. Let me repeat. Term insurance is not always cheap, okay? Now, it's competitive. Definitely, I can say that. But again, if you're young and you still got vibrant and you got other stuff, in all these 5 cases, they brought in a term policy for me to see. Do you believe I took that term policy payment? Let me repeat. In one case, here's what happened. They were paying $40. This person, I guess maybe about 40 years old, I'm guessing. They were paying $40 for a $50,000 term. And to them, that was kind of cheap. And I'm still thinking, that sounded high. Do you know, I came in and compared some other company term where you can get that. Listen to this. Cut the cost in half. Let me repeat. Instead of $40, this person paid $20, cut the cost in half, and in addition to that, the death benefit from $50,000 went up to $100,000. And has all living benefit. It was plain on paper. And so what we did was, we of course share her, the information about here's what you have. This thing, we cut your costs in half and we double up your insurance, and we added all the living benefit, and we added convertibility, and. Well, the interesting thing is I get a call yesterday, and the company that we were replacing told her, well, people can out there promise you the moon, and when it happens, when you die, they're not going to cover because those companies are not reputable and not, they're not going to be around. So therefore, don't think it is, and don't always go by the cheap prices because that's not always true. Because remember how people always tell you, don't always bet, that cheaper is better. Well, so in this particular case, I went back and I said, you know what? You're right. Some of the company I gave you are very, very young. They're somewhat new, right? They've been around only 200 years old. A&M best top rated in the industry. So when the people tell you otherwise, do your homework. Do your homework with the company who you're going to be doing the new business with. Are they reputable? Are they A&M best? Are they top rated in the industry, and how long they've been around? I don't know about you, if a company around 200 years, I think they've been around a long, long time, and they can pretty bet you as far as they continue on. But in this particular case, I just showed it to them. But you know what I did? I even took one step further. I said, you know what? I could offer you 20 years. If you're 40 years old, 20 years from now, you'll be 60 years old. And I'm guessing 60 years old, you can still be around. Based on because you can't predict when you're going to die, and I can't predict when you're going to die. None of us could. But if you choose to do business with me, and you understand this right now, you can never go back and yell at me. When you turn 60, if I give you that cheap, pricing for temporarily, understand that you have to die before 60 for your family to benefit. Because that's what term does. It limits the number of years you have to die within that period. I mean, people buy 10-year term. That means you have to die in 10 years. Are you kidding me? It's really sad because sometimes, some people, there were cases out there, an article where one gentleman, there was an article a long, long time ago, it's really sad. He had a term insurance that's about to run out, and you know what he did? He had a terminal case that happened to him, and rather than, waiting the time out when you pass away, he figured, well, if I die way before my actual term expire in a year, my family at least will have the money. And in this particular case, it's very sad. He did commit suicide just because he wanted his family to have the insurance because he knew that it was going to run out and he knew it. I don't want people to have that situation that happens to them. And you don't hear these kind of stories because the news don't really talk about it, and people out in the industry don't talk about it. Terminally fit in certain condition, but it is not the one that you want to have if you're looking at to protect your family in the future. And let me tell you, these count as a story. So in this particular case, imagine I told my client, I said, look, I can give you this now, but understand that it's not going to give you what you need for long term. Would you believe it? The term pricing this client was paying, I took that and converted into a permanent policy with the same cost. Now keep in mind, because they were young, that's why I was able to do that, keep it the same cost. But the fact that I said, look, I took the same one, converted to a permanent, and you're going to have it until 120 years old. Now if you die, you have to die before 120 years old to get paid. I don't know about you, but in that particular case, it is a safety net that the client has, and that they feel really, really good that, wow, this thing can do that? I say, yeah. And during the time, if you happen to get, sick, you also cover. And if for some reason, and that was a permanent policy. And say, oh, by the way, you remember the term where you're paying this $20 or $30, $40, whatever it is? Imagine down the road, you always have cash that's building up, and the account is growing with the market. The account is still growing with the market, even with the little amount of money that you gave me. Now, I'm not going to advocate tell you that $40 is a retirement. No, it is not, absolutely not. But at least it gave you a decency of a permanent policy that you can never outlive. In addition to that, guess what else it does? Imagine I open this little bucket for you in the future when you go to work and you make more money, where you say, you know what, I can put $100 in, I can put 200, I can put $1,000 into this account. But it's a starting point. It's a starting point somewhere where some of you guys out there, if you just take $1 a day, just $1 a day to change your family life and to change your life, to make a difference of the kind of things what it could do. Let me tell you, I have once I leave the studio today, I'm meeting a couple, 72 years old, and they had the term policy that ran out on them. And they say, Miss Lou, my term ran out. I saw you on TV. Can you help me? We're 72 years old. And I worry because we still got a mortgage. And we've got a situation here that if my husband passes away, or something, that I would have to be burdened with this mortgage and I wouldn't have enough money to pay, because between Social Security and things like that, we needed his income. And if he's not around, how do I get income? And right now he's still okay to be able to qualify. But if there's 72 guys, what are you going to do with a 20-year term if he dies 92? So people do listen, and I was very surprised the audience out there are making calls and picking up the phone, say, Shirley, and your team, how can you help us? Look, there are no charge, there are no cost for us to talk to you about it. We believe in financial education should be free. We'll give you free consultation. After we send you the stuff, we'll send you everything that you needed to know, and then you make a decision. It is not hard, guy, but you got to start somewhere. Maybe, it's summertime, to start thinking about that. Like anything else, I love helping people and I love making a difference in the world. So with that being said, my can be reached number is 703-608-1203. My name is Shirley Luu. I love to talk and chat with you because you know what? Remember, I love it when we rise by uplifting others.